Deutsche Bank is the leading German bank with strong roots in the European market and a global network. The bank focuses on its strength in a corporate bank newly created in 2019, a leading private bank, a focused investment bank, and in asset management. In the upcoming session, Plug and Play CEO and founder Saeed Amidi will be joined by Bernd Leukert, Deutsche Bank Chief Technology, Data and Innovation Officer. They will discuss the current situation and the future of digital strategy of the bank, partnerships, and the landscape in the era of COVID-19. Gentlemen, welcome.
Wonderful. Thank you, Felix. It's great to be here at our Frankfurt Expo, and I am very, very much looking forward to our fireside chat with Bernd Leukert. I have a tough time pronouncing your name, your last name, but it's great having you here, and I very much appreciate you joining us on our Frankfurt Fintech Expo.
Yeah, thanks a lot. I feel honored of being invited, and of course looking forward to the fireside chat in this virtual world where technology is helping to make it happen, as some health viruses are not allowing a face-to-face, a physical meeting.
Yes, and I really look forward to coming and seeing you in Frankfurt soon. You know, for our audience that may not be familiar with your past, can you please little bit tell us about your journey, your career as being a technology person for many years before joining Deutsche Bank?
Yeah, happy to do so, Saeed. So, as you said, Bernd Leukert, my name. I have been living prior to joining Deutsche Bank for 25 years in the software industry. After finishing my study of business administration, then with technical background, and then an additional year of software engineering in Trinity College in Dublin, I joined SAP. At that point in time, I would say a big startup. It had the culture which was different to traditional companies. So I started really my career as a software engineer, was coding, and ultimately was helping companies across 25 industries with solutions on becoming more efficient, in introducing new business models, in helping them to, I would say, to grow and to have an execution of their great business ideas, and not just locally, all over the world. And this was, I would say, a big insight. While technology is often the enabler, one fundamental learning in these 25 years is you have to understand the problem or the opportunity you intend to help towards your customers, whether these are big multinational customers or whether these are small local companies, is not making that big of a difference. And yeah, in these 25 years, having different responsibilities, and ultimately the last 5.5 years serving as a member of the executive management board of SAP, responsible for products and innovation, and towards the end of the career as well for the services delivered to customers. So exciting journey, and then I think when you turn 50, you have to reflect. Either you stay there until you go into retirement, or you say if there is a big opportunity, you do something different in life.
That's right. I'm very pleased to work with great companies in Germany like Mercedes, like Allianz and Munich Re, and of course Deutsche Bank. And many people tell me, doesn't matter what industry you are in, the technology part of your work is the most important part. And this challenge we went through in 2020, it showed that if you were not ready to work remotely and execute, it could have been a disaster. Do you agree that doesn't matter if you're a bank, insurance company, or an auto company, how important is the segment of the technology and digital readiness for these industries?
Saeed, I think it's beautifully said. And I personally strongly believe that companies who are not leveraging technology, who are not leveraging the opportunities of digital, will have a tough time to have a healthy future. To the extreme, you could say either they have a monopoly, then okay, they can do whatever they want, then it doesn't matter. As there is not many companies on this planet, I would say technology is front and center for a healthy, sustainable, profitable future of small, mid-sized, but as well large corporations. And some people might say this was always the case. At least this is not new, since you were referring to the COVID situation last year. But I would say the role of technology has changed in a way that, 25, 30 years ago, it was more a cost center, in enabling the automation of some back office processes. These days, I would say it is front and center and a key ingredient of the value creation the companies provide to their customers. So it's becoming a core element. And was interesting when I joined the Deutsche Bank. I said I want to get rid of the term IT. We should talk about technology, about data, and about innovation, and not as IT as a cost center, helping back office functions to become more efficient.
You are absolutely right. We have had the pleasure of working with SAP Lab, and I am quite familiar with your SAP facility here in Palo Alto. I think with over 3,000 engineers. Before, of course, joining, I'm in Deutsche Bank Lab in Palo Alto. I was wondering how important is it sort of bridging the gap between large technology companies like SAP and the technologies that come from startups, like a very familiar one that I would like to ask about next, Google, that it's like it was a startup, less than 2 decades ago, and they were 3 people when they came to our building on University Palo Alto. So I was wondering how important it is to work with startups that bring new technologies compared to large, corporations like SAP and Google Cloud.
I mean, let me start with a situation I was observing when working for SAP at many customers, a situation which I'm observing here as Deutsche Bank. There is always more opportunities and more demand on what to invest in technology, helping the business, helping all corporate functions, then there is a budget or then there is supply. Now, reflecting a little bit, there was a time when I would say companies said, I have to do everything on my own. If I'm not doing it on my own, then I'm not in full control of what I'm doing. And reflecting on your question, I think the opposite has proven that doing everything on your own, you cannot be the expert and the master in all domains. Therefore, the notion of partnership is the recipe for success. And you can, of course, discuss it from a technology angle, which requires that you overcome the not invented here syndrome, that you are embracing comprehensive end-to-end solutions and providing them towards the customers versus just focusing on your silo where you are good at and what you can offer to customers. And therefore, when you think of big tech companies like Google, I think companies would make a significant mistake if they assume that they can provide the basic technology infrastructure in terms of scalability, in terms of elasticity, in terms of reliability, in terms of disaster recovery and many more aspects, doing it on their own versus consuming that as a service. But that's not, that is just, I would call it the traditional IT. When it comes to new technologies, think of a machine learning, artificial intelligence, think of natural language processing, think of many more things which are technology enablement of new business opportunities. Why should a non-technology company invest in own organic capabilities and compete with the tech giants of the world? And now the other aspect of your question, when it comes to fintechs, why not embracing the creativity, the speed, the agility of fintechs and incorporating fintechs in your end-to-end solution offering you are giving to customers? So do not consider the fintechs, the startups as your competitors, but open the kimono, meaning open an asset, and what is the best asset a big company can give is access to their customer base. At Deutsche Bank, it means giving fintechs access to 20 million customers globally. That takes some time in order to have this installed customer base and giving access to these solutions. And on the other side, what can a big company give in addition? It's kind of stability, it's kind of the proof point towards the customer that fintechs have a real value add, and bigger companies like Deutsche Bank have joined forces and are committing a solution towards the customer. So I would say on both angles, the notion of openness, the notion of partnership is the recipe for success. While, Saeed, that means a cultural change. That's probably easily said when we have now that fireside chat, when you are in boardrooms, when you are internal meetings, then you have to overcome that barrier of inviting even competitors and sharing assets with competitors.
Yes, in fact, you took the cultural change as a big part of success, because when I started Plug and Play more than 10 years ago, I used to only collaborate with CTOs and CIOs. And I am so happy to see on your title, you have data and innovation officer, because innovation is about future and offering new product and new services to your 20 million clients. Whereas you still have to keep the data safe and keep the big organization functioning. But looking into the future, and building new product, I think, needs a new culture, especially in traditional companies, in, I don't want to call them dinosaurs, but in uh, companies that are giants already. How do you go about this cultural change and the acceptance of new technology and working with fintech companies and startups?
I think let me refer to the word plug and play, because I love the term, and what is behind that term plug and play? It means if you really take it serious and if you really are interested in a partnership, then you are not living next to each other and say, I'm not fighting against you. You have to do more in order to overcome that cultural barrier, which means you have to work together and you have to be convinced that only a plug and play solution is ultimately delivering superior value to customers. And I can give you a few examples. As I was very interesting listening to you. To whom do you talk? Traditionally, like local banks, but as well multinational and global banks like Deutsche Bank have been talking to a CFO, have been talking to treasurers. If it comes to the corporate bank, of course, when it comes to private people, you talk to individuals about wealth management, you talk to individuals about their need for mortgage or credit. But what is the difference of a partnership? The difference of a partnership is that you are going beyond offering financial services. While you're talking, still we are in the financial service industry. And what do I mean with that? You have to have the internal conviction call, but then as well the related execution, that ultimately you want to have a financial service that is seamlessly embedded into the business model of your customers. So I give you a small example.
Please.
When the industry trend of selling machines is now flipping towards selling outcomes, and customers are only willing to pay per use. We are used to that in some areas. Take electricity. We have that pay-per-use model already established, but I predict that this model is kind of penetrated throughout all industries sooner or later. We have on that planet. In some areas, it is entering into a subscription. In others, it's purely outcome-based. And that changes not just the business model of customers from selling a product once, sending an invoice, and then getting a payment. It is resulting into micro payments whenever a product is used. And in order to introduce such a business model in a kind of efficient but as well profitable way, micro payments have to be embedded into the data flow of the customer. So whenever the data shows the product is used, and then you just have to agree, is it daily, is it monthly, is it weekly, is it quarterly, this should trigger automatic payment. And then what is the innovation? You have to agree on which data do you share between two companies, a fintech, a global bank, a manufacturing company, in order to provide that seamless plug and play towards the customers. If you are not doing that, I predict that huge opportunities will not resonate, as you cannot implement them in an efficient or in a profitable way. You can implement them manually, but then the idea of the new business model will not work. So that is the cultural change that you have to overcome, and you have to build trust, and of course as well you have to build controls. Trust alone is not making it. You have to permanently control as well in the interest of your customers. that you are only supporting financial streams in case you have confidence and you have proof points that these micro payments are resonating. Just one example which we are introducing at many customers, which is supporting the e-commerce business in many instances, and I could continue to share examples on that. And it would be wrong if we are doing all of that on your own. So just to close, we are as well investing in startups when there is an excess of liquidity, and at least in Europe we have a negative interest rate. So we have been investing in a startup in deposit solutions who is providing our customers opportunities to get positive interest rate on savings. But we are doing it by managing the customer onboarding process, everything which has to do with KYC. So giving customer a positive outcome, embracing startup technology and helping them to grow with a seamlessly integrated solution.
That is really, really fantastic. I believe this is your vision of the future of banking. And I recently read an article about one of your talks that Deutsche Bank is going to be a fintech company more than, traditional bank. And, these technologies are really bringing everything closer, like you mentioned. We saw that e-commerce and last mile delivery grew by factor of 2x in 6 months here in California. And can you tell me like other examples of how you are utilizing technology from Google Cloud or other technology? I heard you have other partnerships to expedite your roadmap and your future plan.
No, happy to do so. And I'm personally extremely convinced that banks in general have to become big fintechs and embracing technology to the maximum extent for internal own purposes, but going beyond as well, offering interfaces in a plug and play mode and maybe even white labeling them so that the investment you are doing in dedicated services can be leveraged by customers, can be leveraged by competitors, can be leveraged by fintechs. One example is the currency fluctuation and the exchange rates. Why would you not offer FX currency exchange as a service towards customers, giving CFOs ongoing insight, not just in revenue in different currencies, they act across Europe or globally, but having the opportunity to see that immediately mitigated, if you want, even with currency FX hedging as an additional service, but seamlessly embedded. And now going beyond, you asked what opportunities do I see with Google? When last March the Corona crisis hit all of us, what did companies do? They were just concerned about liquidity. And I would say most of the companies just took the credit line and asked for the maximum liquidity they could get. Not because there was an immediate demand for that liquidity, that was just perceived as kind of a safety net or a safety buffer. Those who didn't need it, by the way, gave it back 3-4 months later. But what was missing, and that is what we are addressing now in a project with Google, why not anticipating data streams and building an intelligent, smart model, predicting the future liquidity demand based on certain scenarios, which a system has learned from hundreds and thousands of events happening, and giving the treasurer, giving the CFO a more smart forecast on what liquidity they need. So this is a project we have been running with some companies in a joint collaboration with Google AI, and we call that smart cash flow forecasting.
That is great. I mean, I can tell you that you're speaking exactly my language. You know, here in California, especially Northern California, AI is going to change everything. But unless you apply it to a real world problem like cash flow and planning the future, AI by itself, it's just great technology. But when you apply it, it can really increase savings and improve productivity. You know, for our audience, if you had to predict 2021 and beyond, how do you see the future? Do you see it bright? Do you feel how long this little, I mean, it's not a little, it's a tough time, will last? And how can we help our clients to come out of this challenging times?
First of all, I think nobody likes extraordinary crisis situations we are in. And we all have to work together and team up to overcome this. But if you allow me a positive aspect, and that is the notion of accelerating the penetration of technology to serve customer needs, to protect the environment, and to utilize resources more efficiently. Whether these are financial resources, whether this is energy resources. So the whole notion of as a service came to a new understanding in executive boards, in the whole notion of APIs suddenly got attention, because if you just assume that there is capacity available, you do not have to manage compute, storage, network, machine learning, AI capacity in your own company and prepare yourself for a crisis, for a disaster situation. You are just consuming if you need it. And what one learning here at Deutsche Bank was, while I would say elasticity as well became a complete new meaning, because growing and adding is easier, assuming you have the capital or the liquidity. But adjusting then to the demand later, that's not that easy, because then you have the assets in your P&L. So, and I was simply using the change of the way of working, the working from home, explaining that, yes, short term, we had to invest in servers, we had to invest in networks, and we did all of that by collaborating in the company, and we acted as one team in a crisis situation. But assuming we would not have to collaborate in order to get servers, in order to empower people in different locations, just think about if everything would have been already built for the next generation and consuming as a service. And I think that trigger was definitely coming from that crisis. So I predict that 2021, but as well beyond, has accelerated a lot of projects, a lot of strategies, and has accelerated especially the execution. Has accelerated as well the collaboration between companies, because you identified alone you will not make it. So teaming up, building partnerships, business friendships became a complete new meaning. And it's interesting that sometimes you need a crisis for that. So I see the future very positive, as we have learned to execute much faster, and why giving up that speed of execution, many companies, included Deutsche Bank, has shown in these months.
I really, appreciate you giving plug and play couple of plugs in your talk and talking about future being bright and great, because as leaders in different industry, we need to remain positive, and we need to look at the future, that it will be a much better world as we, use technology to enable us. And again, thank you so much in joining us in our fireside chat at our Frankfurt Expo. And I love to see if you have any closing remarks for our audience.
Saeed, let me as well thank you for the time. Thank you for inviting me and having me. I really enjoyed the dialogue and the conversation. And in closing remarks, I just want to share that Deutsche Bank is approachable. We are up for partnerships. We want to join forces and help our customers to overcome the current situation, but more importantly, to introduce future business models in a much more accelerated way. And that only works in partnership. Thanks a lot for having me.
Wonderful. Thank you so much for being with us. And back to you, Felix. Thank you. Thank you.